This is a property investment journey, right? Like sometimes you just don't have every single little granular bit that you need until you've kind of executed it.
Simon and I were kicking the soccer ball, sorry mum, around the office the other day, and I noticed that Simon's name was back on the board. Now, I know he's been working on refinancing for the last couple of months and he's getting himself in a position to go for property number 4. Now, 4 properties in how long?
That'll be about 2.5 years, or about 3 years by the time I get it all done.
Holy hell, man. Like, massive outcome, man. I'm so stoked for you. So I suppose what we wanted to do today is talk about Simon's 4th property, which is super exciting. I know there's a lot of people sitting out there on the fence. Is this a good year to buy? Should I buy it? What should I buy? And I hope through Simon explaining his situation, it helps some people fill in that gap. So I suppose the question that no one asks, man, is you've already got 3 properties. Why are you actually buying a 4th?
Look, it's interesting, you know, because I initially set out to only purchase the 3 properties. That was kind of my plan. But, you know, once I met Tay and we started to build like a much better relationship, we were kind of like, okay, cool, we can probably take this a little bit further than we wanted. So we started pondering on that. But when the penny really dropped was when we were reading updates late last year from Phil Anderson about the second half of the real estate cycle that we're just about to come into. Now, Ben's actually done an interview with Phil on the podcast and also done a video breaking down the 18.6 year real estate cycle. So highly recommend going and checking that one out if you haven't. But what Phil was saying is that, you know, if he were in a position to be starting again, he would just be buying assets right now, buying as many properties as he possibly can. And I'm looking at my situation, I'm like, look, I am loving what I'm doing for work. I am so happy to trade the time to do what I'm doing at the moment. I'm fortunate enough to be earning quite good money. I'm seeing what's happening in the Southeast Queensland market, and I just see this opportunity. Now, I wouldn't be able to do this if it wasn't for Taylor, my partner. Now, since she's come into the equation, obviously having 2 full-time incomes, she came in with a nice chunk of change in her bank account into the relationship. So thanks, Darla, you're an absolute champion for that. And it just really allowed us to kind of start thinking about alternative opportunities. And, you know, overlaying the 18.6 year real estate cycle, plus the record low interest rates, plus with Brisbane market being where it is right now, plus the situation that I found myself in with 2 full-time incomes, with no dependents, it ended up just being a no-brainer that I needed to expand the portfolio and take advantage of the market at the moment, because I don't want to be one of those guys in 10, 15, 20 years time that looks back at 2020, 2021 and goes, oh shit, like I didn't take that leap of faith. I didn't go a little bit harder. And I see all the stories that I've heard about previous real estate cycles, about previous investors as hindsight. And, you know, I want to walk the talk as well. Like, I talk about property investing all the time. I talk about financial freedom. This is just going to make my journey a hell of a lot easier.
You know, so the plan was Simon was going to, you know, start with the 3 properties. He's got his own home on the sunny coast, a bit back from the beach. And then he was going to do 2 houses with 2 granny flats in Brizzy. Now, that was one outcome which in about 15 years with the effect of inflation and rising rents would have given you about $60,000 a year of passive income in today's value, or $100,000 at that time. But obviously adding the extra property, one, covers some of the taxes, the expenses on the property. It also, you know, like you guys are going to move into the baby phase of life at some point in the next 5 years, and it, you know, just takes a lot of pressure off as you move into that stage of life as well. So I fully get it, man. It completely makes sense.
Yeah, that's what we were thinking. Like, you know, to try and take that 100K gross to 100K net is sort of the like longer term goal, which is a nice position to find yourself in.
I love that, man. So let's talk about Brisbane right now, because the cool thing about what Simon and I do, which is talk about property 40 hours every single week, is like, Brisbane is kind of like a candy store at the moment, and it's like there's so many different options that are going to result in great medium to long-term outcomes. So how do you go, well, Brisbane's the market I want, this particular part of the city, this suburb? Like, break down some of that more granular stuff for the geeks like me that love it.
Dude, how many times have we talked on the lunch break? Oh, should I be doing this? Should I be doing that? Like, I swear at least once a week we're talking strategy and going, okay, well, what is going to make the most sense for this next purchase? But to me, it starts with understanding how much I can borrow.
Yeah.
So I've had confirmation from my mortgage broker that we can service a significant amount, but we've obviously only got a certain amount of a deposit that we can put down. So we're sort of looking in that $450,000 to $550,000 range, which opens up
healthy for Brizzy, right?
So much, so many opportunities. But it sort of opens up anywhere from sort of 15 to about 30 kilometers from the CBD. So it essentially starts there.
So how do you go, there's this option, that option, that option, like, and refine it back to your strategy, which the cool thing about Simon and I is we both have a clear long-term strategy, which is financial freedom through houses with granny flats.
Yeah, so that was essentially the plan. Now, I want quality because quality is important to me. We've talked about the power of compound growth so many times on this channel, and you know, I don't want to be one that misses out on that. So it's got to be a quality area where there's decent demographics, where there's a high percentage of owner occupiers to renters, where there's good infrastructure and public transport options surrounding, but also where there's really low vacancy rates to make sure that I can rent that property out. So all of those things are to target long-term capital growth. So I want this property to give me capital growth over the longer period of time. Now, I'm not trying to speculate and get the short-term gains over the next 2 to 3 years. I'm thinking over the next 20 to 40 years that I'm going to hold this property. So capital growth is the main focus for the strategy. Now, what I also want to do is generate positive cash flow from this investment as well, because I'm the same as Robert Kiyosaki. I don't believe in losing money to make money. You know, negative gearing to me is just, it's not a part of the conversation, because I want my assets to pay for themselves. You know, if you feed into the rich dad, poor dad method, it's a liability unless it's income producing. So cash flow is just as important as capital growth for me. So I needed to focus on areas where I can build a granny flat, because unfortunately, when you're buying a single income property in a major metro market, it's unlikely that it's going to be positive cash flow. That's just a reality of buying in metro markets to target capital growth.
That's right. And you know, the closer you get to the city or the beaches in Sydney, Melbourne, Brisbane, Perth, Adelaide, the more likely you're going to go into that case of it's probably going to be negatively geared, unless you've got a very specific strategy, which Simon's following. Yeah,
so there's going to be a bit of a trade-off, but that trade-off is to increase the cash flow. So I really want to create dual income. So where I've got the home and then another little tiny home or granny flat that I can rent out separately. So in Brisbane, there's only a few areas that you're legally allowed to do this. So I needed to make sure that I'm focusing in these particular markets, and then I'm kind of refining it down. Still haven't narrowed it down to 1 or 2 suburbs at this point in time. I'll wait until I've formally got my pre-approval organised before I nailed that. And then I'll be going out there and finding that opportunity.
You know, one of the questions that I struggle with, and so many people struggle with, is you've got this $450 to $550K budget. Now, do you go buy a cheap pocket in a more expensive suburb with a more average quality home, or do you go for a higher quality pocket in a good suburb with a better quality home on it? Because that's something that, like, I've made my terms with in the last few years personally.
Yeah, well, we were actually talking about this yesterday, and I was kind of saying, look, I'm happy to go in this particular pocket of these particular suburbs, which were lower quality suburbs, but the highest quality pocket. And that would enable me to get a slightly bigger block, a slightly better quality house, but, you know, it's in the lower quality suburbs still. Alternatively, if I look into the higher quality suburbs, I'm going to have to go for the smaller block. I'm going to have to go for the more unrenovated house, because that's all that my budget is going to enable me to purchase. So I'm actually still in 2 minds about which of the 2 that it's going to be. Essentially, what I think I'll do is I'm going to look at the 2 areas and then wait for the right opportunity to come up. And then at that point in time, go, okay, is this ticking all of my short and long-term goals?
You know, because Simon's goal is capital growth and cash flow. One of the most unique things about Brisbane at the moment is you can get a suburb 30K from the city that's worth 700K, and then you can buy a suburb 19K from the city in the same area closer to the city with as good a school districts for 350K. So it's this weird anomaly that doesn't exist anymore in Sydney or Melbourne, because when they went through that boom in the last 10 years, closer to the city with better transport now wins. So that's what makes it harder for Simon to like, you know, that's why I asked that question, because like, I don't think I would go for the smaller home on the smaller block in the better suburb when I could be a couple of suburbs closer with much better cash flow, much better demographics, and better household income in that pocket of the suburb, you know, and also spend the 100K less. Like, I've been thinking about this myself lately. You don't always have to go for that absolute premium property like a lot of the other guys talk about. You can go for that balanced property that's still going to rise well but get incredible cash flow and much less headaches because it's in a better pocket of the suburb, better street, bigger land size.
And we were saying this yesterday. Essentially what we need this property to do is provide me with $700 a week today of rental income from the house plus granny flat, because with a 2.5% increase over the next 10 to 15 years, will look more like 1,000. So that's what we're looking for. So we're still working through that. And, you know, this is a property investment journey, right? Like, sometimes you just don't have every single little granular bit that you need until you've kind of executed it. But for this, I still haven't completely finalized pre-approval. So I'm still pondering, I'm still researching the market, still asking the right questions with the right people to try and figure out exactly what I'm going to do. And then once I've got that pre-approval, we will nail it down to one particular suburb, one particular strategy, and then we'll just go out there and focus on that.
I'm so excited about that, man. Like, one of the hardest things as an investor getting started is just going, this is the type of investor that I want to be. This is the plan that I've put in place and got, you know, my financial advisor or accountant to sanity check, or a successful investor to check. And this is what I'm going to do. Full-blown blinders on and just walk your own race, and not get caught up by this shiny suburb or this shiny city, just going, this is good enough for me based on all of these indicators, and then confidently walking forward and just smashing it.
Hell yeah.
So what's next after this, bro? So I was just looking at the last question. What's
no
next
worries.
after this for you?
Yeah, so essentially once I've purchased this fourth property, that's my accumulation phase over. I am completely happy with those 4 properties to just sit on them in this second half of the cycle. That gives me massive exposure to Southeast Queensland. I've got diversification on the Sunshine Coast, North Brisbane, South Brisbane. So I'm exposed to a number of different pockets. So that's it. And you're going to have to do what I do for you, which is just no more, no more. Because, you know, once things start to go crazy, I'm sure we're going to get a little bit of FOMO and want to get in. But sometimes you just got to accept that, you know, this is the plan, and then got to get ready for the next part of my strategy, which is essentially sort of consolidating the home. So that'll be building the granny flat down in South Brizzy, doing something with my properties up in North Brizzy, probably knocking them down and rebuilding something that's going to give me awesome cash flow, and then finishing off the renovations on my own home. So then I've got like a really, really, really high quality portfolio. I'm going to have amazing positive cash flow. I'm going to be getting significant capital growth from the portfolio. And then I'm just going to work really hard and start paying off some debt, which is a bit of a boring phase, but necessary leading up to the top of the cycle.
You know, like, it sounds so fun, man. Like
Like,
now.
Boring. What am I talking about? Building a granny flat, knocking down and rebuilding 2 homes, renovating a home. It sounds sick.
There's a bit to do for you over the next 3 years, which is awesome. Like, I think the funnest part of an investor is figuring out your plan and slowly executing it. And paying off debt's really cool as well, because it moves you into the different phase of like choices in your life.
Yeah.
You know, it enables you to not just be a project focused person like I was for the last 10 years, which was so necessary, but to actually go, what do I want to do? And that's actually been a bit confronting for me at the moment.
Yeah.
Like, I'm sort of going through that again, going, well, I'm not like running around like crazy anymore. I'm slowly winding down and settling a bit and going, it's okay to just buy property and help other people smash it. And it's fun to go for a little surf before work versus just getting in there earlier or leaving later. And you know what I mean? It's
just
like
a complete change of lifestyle and just completely different phase of your life as well. Like,
fully
the 10 years of super hard work and you know, crazy investing. It's like, how do you transition? And that's human nature, right? Like, we're always trying to strive for more. We're always like goal oriented and like, what do I need to do next? What do I need to do next? But recognizing that next is just enjoying the fruits of my labor is
Fully.
like actually a phase of your journey.
Completely. So I hope you've enjoyed this video. I'm so stoked for you, man. Like,
Cheers.
it's really exciting, and I know that it's all going to work out for the best. I'm excited to like be a part of the next few years and go through it with you and have a laugh when different things come up.
For sure.
And I'm super grateful, man, for you sharing that journey.
Yeah, no worries. Thanks for listening, guys.
If you haven't already done so, guys, give this a thumbs up, share it with someone who needs a bit of positivity or some inspiration, and please subscribe to the channel. We wish you all the best and stay safe during this time.
Oh, sweaty, so sweaty.